Well, hello and welcome all the Web3 enthusiasts. This is Max speaking, and this is Synopsis Talks, a new exciting episode. Today I'm hosting this interview with Mike Cahill, CEO of Douro Labs. So let's get straight to the action. Welcome, Mike. How are you today?
I'm good, Max. Nice to meet you. Nice to be here.
Yeah, so to warm up, since it's your first time at Synopsis, and that I hope that not last one, could you please briefly introduce yourself for our viewers?
Sure thing. I am the CEO of Douro Labs. I'm the co-founder of that company, and I'm co-founder of the Pyth network. Douro Labs is primarily focused on building on the Pyth network and making sure that price assets are available for builders on Web3 across all different blockchains.
Perfect. Thank you. And I believe that our viewers are in general aware of what you guys at Pyth and Douro Labs are doing. And today we're going to dive deeper into this topic. And let's start our interview. First question. So please tell us how you came up with the idea to create a decentralized oracle. Feeding real world data to smart contracts is one of the hardest tasks in Web3, I would say.
Yeah. Yeah. So let's just take a meta point. So, what are we trying to do on blockchains in general? And to kind of zoom out, it's, if you think about the global financial markets today, that term is actually quite misleading. There's really no global financial markets. There's regional financial markets and they operate globally. But I think our goal for anyone that's operating in the financial or kind of the DeFi space is inspired to build a truly global financial market that transcends boundaries and borders without kind of high transaction fees and gives a lot of, investing freedom to people. So to kind of break down those segments of global financial markets, there's really three verticals. So first one is price, and there's execution, and there's settlement. This happens in the traditional markets space. And so, as I mentioned, they're very regionalized. And so in like the US equity markets, there's this sense of the national best bid, best offer, and that kind of covers the price. And then there's execution that happens on exchanges like NASDAQ or NYSE. And then the settlement all happens on this thing called the DTCC, right? And you can go through a list of all the markets around the world, and they all look like this. And so when you're kind of reinventing from first principles of global financial markets, of course you need settlement. That's what layer ones and layers twos are doing. Of course you need execution, and that's what protocols like Jupiter and Synthetics are all doing. But certainly you need price. And you need price for all the assets. And so that was really the inspiration that we had. We wanted to rebuild the markets on blockchains for the purpose of everyone in the world being able to get fair access. And in order to do that, you needed to get really, really high quality data on chain. And there's all kinds of funky stuff along the way that would prohibit you from doing it. So just to give you one example of this, most of the data that is, in these regionalized markets is highly controlled by that one exchange that is usually takes the lion's share of the volume. So in the US equity markets, it's NASDAQ and NYSE, which is owned by ICE. And they make billions of dollars selling their market data. And they're fairly controlled with how much they distribute their data. Like they have sort of this walled garden. And if you're a trading firm, you have to buy the data back from them in order to be able to operate on the exchange. So this is problem number one. It's like, how are you going to get data from these large exchanges in the real world who have no interest in selling it to blockchains or distributing it to blockchains? How are you going to get that there? And that was the biggest problem. That's why it's never been solved before. So the Pyth Network's mission was to go and solve this problem. And if you combine the fact that there's just this one seller and the fact that there's a lot of participants in the network, you can come up with a solution fairly easily that requires a lot of coordination. So if you go upstream from the exchanges and you go to the trading firms themselves who have lots of data, you can approach them and say, hey, would you like to solve this problem for a global financial markets? Now, it turns out to be the case that most of these trading firms, actually all of the trading firms, do not like paying high market data fees. They, in fact, in most cases, they are abhorred by these fees because they feel like they're buying their data back. And so they're kind of this aggrieved party. And the network was really designed around, you've got this data as a trading firm. For instance, it could be Virtu or Susquehanna, Jane Street, DRW. These are the big giants of the trading space. It's sitting on your books at zero, right? Like you're just kind of collecting this data and keeping it in the garage. So the idea was, well, why don't you make that data available to the Pyth network? We'll go and try and build this whole new global financial markets together by solving what's really paramount, like that price layer component of it. And if it works out, great. You'll have some stake within the network, which would be sort of your upside. And from their perspective, they're not selling the data. So this is kind of this found resource. It allows the network really to start from a zero cost basis of being able to make this available. And that's really the superpower. And we're really just getting started with what the network is able to offer, because crypto is all that's traded today in the kind of the crypto global financial markets. The Pyth network has got 100 or 550 price feeds, and 75% of them are in crypto, but the rest of them are in the real world asset space. This is where the markets really can get exciting and can grow. So there's nothing stopping the network from being able to add hundreds and thousands of new equities and futures to be able to make available for anyone to build on top of. And that's what really we're starting to see.
Well, a great beginning, and thanks for so many details. Okay, let's move on to the next question. And actually, it is the Pyth oracle is decentralized, but is it possible to also make it trustless in the future?
So trust is really what you're doing as an oracle, right?
Yeah.
And the oracle problem is the fact that blockchains spend all this time creating a network that they can trust without a single trusted person. So it could be proof of work or proof of stake. And as soon as you bring in exogenous data outside of that state, you've broken the trust. And so that's really the main export from an oracle network. And so the way that the Pyth network achieves this is through a couple of different steps. So the first thing is Pyth runs its own blockchain. It's called PythNet. It's a fork of Solana. It's the very first fork of Solana. And it is fully public in terms of the ability to audit it and see what transactions have been processed. The data comes from this network of, as I described before, trading firms, but it's actually expanded quite a bit since then. So there's trading firms, there's exchanges who are providing their data. There's 120 institutions providing their data today. They're fully public institutions. You can go to the website and you can see which ones they are. And they're all kind of institutions who have some business other than providing this data. If they're a trading firm, then they're making money from trading. If they're an exchange, they're making money as an exchange. But this is sort of the foot that they have in the data play to kind of solve this problem. So right now, you created this network where there's no single source ever of data, right? So each price feed that the Pyth network creates comes from up to 120 different sources, done on a public blockchain that's fully auditable. But wait, there's more. So that was the first composition of trust, but it just got a huge upgrade with price feeds v3 about 2 months ago. So price feeds v3 included Oracle integrity staking. Now, this is a network that's very much like proof of stake. Publishers can stake to the quality of their prices. Delegators can follow and stake to the quality of a publisher's price. And like in a delegated proof of stake network, like a layer one, both of those participants are incentivized to receive rewards for good behavior. In this case, it's good data. But like in those networks, if they were malicious or if they have an accident and it ends up creating a price that is bad downstream, bad as in it's provably checkable against some of the top exchanges, then they're eligible for slashing. So this adds an element of economic security. There are already over 100 million Pyth tokens staked to this. It grows kind of every day. It's just been launched in the last 2 months. So that's a really exciting kind of development from the network to not rely just on reputation and on the mechanics of the network itself, but to add in this incentive.
Get it. Thank you. Well, and another thing I'd like to know is how did you guys manage to onboard so many top-tier institutions, including Sony, Binance, Wintermute? What's all your solution for them?
Yeah, so I mean, we've been around since the start of 2021, and it's been little by little. And the network adds about, let's say, 3 to 4 publishers per week since it's been around. In the early days, it was that narrative that I gave you. So you go to Jump Trading and you say, "Hey, look, do you love paying market data fees?" And the answer is no. Would you like there to be a way for you to earn from market data? And the answer is yes. And by the way, this is something that your competitors are doing. Would you like to join? And the answer is yes. So that was actually much quicker than we had anticipated, because there was this kind of almost FOMO where like one of the big traders would join and then the rest would say, "Oh, I want to be part of that. That sounds great." And then there was like smaller traders that actually wanted to be in the network. There was, to them some signal, and like if you're big enough and you can participate in the network, then that's going to tell people that you're really legit. The trading firms were kind of done, and then we started getting the exchanges. Exchanges was, crypto exchanges, they get it. They just want the market to grow. And kudos to them. I think that's the right approach. But there are some exchanges like US equity exchanges that are the smaller ones in the US, IEX, MEMX, MIEX are some of them. And they don't make any money from market data. And they're also kind of aggrieved by the fact that NASDAQ and IZ make so much. So they kind of participated in this as in, let's see if we can be early arrivers to like the new price of the global markets, right? Like if we can be a meaningful contributor to the Pyth network, we're not a meaningful contributor to traditional US equity markets. This could really move the needle for us. And, I commend them for getting on board so quickly as well. And that grew pretty quickly to the point now where there's Cboe Global Markets. They're the third largest US equity exchange in the US. Obviously, all of the options and the VIX trade through there. They make about $500 million a year selling market data. They've joined and, as a kind of a vanguard of the expansion of their digital markets business. So, to answer your question, little by little, there's a different story for everyone. But I think the power of the brand, the uniqueness of the opportunity, and the fact that Pyth is so specifically designed to solve this problem. There's other oracles in crypto, but almost all of those oracles rely on the existing like workflow of market data. It involves somebody buying data from somewhere. This is a rewriting from first principles on how the data works in general. And I think that's what people get most excited about.
Wow. Now we know the recipe of success and all these logics behind. Thank you. Well, another question is a little bit bigger than the previous, but I believe you will deal with it easily. It looks like your first-party data providers and your users are practically do not overlay. Do users pay data providers directly, or the incentives are coming from the initial Pyth token allocation?
Yeah, so to answer your question, it's mostly that there's an incentive for the publishers today, although the economic supply chain is in place for fees to take over in sort of the more mature phase. So the network has released its white paper and like token allocation, and there's 22% of the supply which is reserved for publisher rewards. So when I spoke about the publishers in this Oracle integrity staking setup, they're staking for rewards that come from this 22%. And they had been incentivized in the past in some cases, where early participants did receive allocations of the network to be able to, kind of move the needle to go do some coding and build, and get up to speed very quickly in the days before they were kind of a trading token. In terms of like the way that economics work going forward. So the Pyth network operates like a hub and spoke model. So as I mentioned, there's a blockchain. It's called PythNet. It only runs the Pyth application, right? So publishers all publish to this blockchain. All of the symbols are listed there and all the prices are aggregated there. But it's connected to over 85 different blockchains. Now, if you think about it, all of these prices that are on Pyth, this 550 updating multiple times per second, they're not that useful if only application on PythNet is Pyth. So it's connected via bridges to these 85 blockchains. And anytime you need a transaction to be delivered to, say, Sui or even Solana or Layer 2, you ask for that specific price. It's a very efficient model, right? So you say, I want that price to be delivered over to be used in this smart contract application. Could be a lending protocol, could be a trading application. And I want it to be signed and verified. I want all that trust. In that embedded is a Pyth fee. Now, today the fees are set to next to nothing. It's one way equivalent on every blockchain. But in the future, those fees can go up as the market matures. So there's embedded a place for the economics to work at scale. There's no new code that needs to be done, no new negotiations that need to be done. This is fully controlled by the DAO token holders vote on how to set these fees. And right now they are incentivized to make those fees as low as possible, which I think is the right thing to do, because we're trying to not necessarily take market share from, centralized exchanges and crypto. We really want to take the market share from this fragmented global financial market I described before. And I think that it's going to be way bigger than what it is today.
Whoa, brilliant. So the next question I have prepared is, and I already see how many details you can provide for it as well. So it's a little bit of, I don't know, sure, maybe tricky, provocative. So what happens if there are so many outliers in the data feed that the real values become outliers?
Yeah, so this goes back to how do you trust the price? And so it comes down to a couple mechanisms. So the first one is you've got a lot of inputs, right? So there's 120 publishers. That's like the superset of publishers to choose from. And then you go down from a symbol basis. So symbols may have up to 32 publishers. And it gets aggregated, of course. And the way that Pyth comes up with a price is based on basically 3 votes from each of the publishers. So they have a price and then they have a confidence interval, which is how confident they are in the price. Effectively, it's a symmetrical bid-ask spread. And those constitute 3 votes. You aggregate them together using a weighted median, which makes it very, very resilient to sort of outliers. So that's kind of the first element of it. But then, you may say, what happens if there's only 10 publishers and 6 of them have outliers? And so that's really where Oracle Integrity Staking picks up the baton. So Oracle Integrity Staking says if any of the prices are the aggregate price, right? So not the input prices, but the aggregate price. If the aggregate price ends up being wrong, and there's a rule book for slashing, and that's publicly available against the top exchanges where that asset is traded, then a slashing event will occur.
Okay, thank you. So today you also mentioned that you use more than 80 networks, 85 if I'm not mistaken. So what blockchains are the most popular among the users of your Oracle?
When you look at the consumption metrics from the network, the fastest blockchains are with the lowest transaction cost are always the winners. And if you were to sort by kind of activity in the DeFi space, so it could be like DEX volume traded, those will end up ranking highly amongst the biggest consumers of Pyth prices. So to give you a little bit more further information, Solana is number 1. So you've got Jupiter there, Drift, Zeta. Those are very active markets. They use Pyth to allow for trading to happen on their perpetuals markets. They consume a lot of data, and so there's a lot of deliveries there. We see similar types of activity from Sui and Optos. In some cases, it's like Bluefin on Sui, who's a huge perps trading firm or perps protocol. But in other cases, we start to see there are some protocols who are pushing these prices on to try and attract builders to the network, right? Like there's a little bit of development and engineering work to be able to pull prices from the Pyth network to bring them onto, say, Optos. So it's oftentimes a strategy from some of the ecosystem teams to just say, hey, you know what? We're going to make all this data available to you natively in the layer 1 without having to write to the Pyth network and pull it over. Although that usually ends up being something that just happens in the early building phases and then people kind of transition. Blast layer 2 has had a huge summer. Syn Futures was a big trading platform that was very active. And so we saw tremendous amounts of volume. It was more pronounced even though with their kind of the Blast airdrop. It died down a little bit, but those are generally the types of trends. You can look out for a lot of these statistics at the KPIs page on the Pyth.network website.
Okay, gotta go and check it. Thanks for another detailed answer. So moving on, the next question is VanEck recently launched the Pyth in Europe. However, it brings the question, any new TradFi focused product offering planned, or are you focusing on Web3 offerings?
Well, I mean, it's difficult to comment on things like that. What I would say is that the Pyth token is available in a lot of places. It's available on different exchanges. The Douro Labs really doesn't do much in terms of making that available. It's some of these exchanges do, and VanEck decides to do. But it's great to see, right? To me, this just means that more people get the chance to participate in the network based on the appetite that they have, the jurisdictions that they live in, and whatever the entity that issues the Pyth token has to go through in order to make it available in those different jurisdictions. As a token that's available in a lot of different places, there's been a lot of exchanges and issuers that have done this sort of thing. There is not a lot of activity within the US, although a Kraken US has made the token available. Again, this is stuff that Douro Labs doesn't really participate in. But it's good to see that there is wide distribution. There's still some areas where it's not yet available. There's not a wide distribution in the US. There's no US like ETNs or ETFs. So certainly there's more room for distribution to grow in the future, but I have actually no insights onto whether or when that could happen.
Okay. So you're kind of just glad to see this, but nothing super beautiful about this.
Yeah, it's great to see. I mean, in general, you just want to have more availability just because we're focused on the network growing, right? And how does the network grow? More publishers, more application users, and then more governance participants. And that's been growing steadily. And we just love to see more activity within the DAO.
Cool. So actually, the next question is all about this. Not about some insights, but still some announcements. So please tell us, how has your Oracle improved over time, and what developments are you planning next?
Yeah. So as I mentioned, we've just released Price Feeds V3. So that implies that there's been 2 others before that. So I'm going to quickly describe what those were. So Price Feeds V1 was on Solana mainnet. To be everywhere, you need to consume a lot of block space in order to publish all these price updates. Being on a public blockchain that's competing for block space with other applications, NFTs, meme coins, etc., is not ideal. So creating Price Feeds V2 on PythNet was a must, and also removes any sort of reliability like issues that you could potentially have with Solana potentially going down. And so knock on wood, we've never had any reliability issues with PythNet. It's never gone down. And we've always been able to publish prices thus far with no issues onto all these different chains that we've been on. I kind of alluded to it before, but global financial markets need a whole lot more prices. So 550 price feeds is by far the most you will ever see from anyone in our space. As I mentioned, we don't really fit into a category of our competitor oracles. It's a totally different composition. Pyth is generating prices for the first time. It's not bridging and trying to grab prices from places in a trustworthy way. They're just fundamentally different. But 550 prices is very good from DeFi standards, but it's pretty lackluster from global financial market standards. There are about 3,500 symbols on the NASDAQ. There's about 2,500 on NYSE. There's about 2,000 on the LSE, London Stock Exchange. There's about 3,000 on the CME, 2,000 on ICE. So there's a lot of work to do. So we need to see the number of symbols and the Pyth network go up a lot. We've been focused on making sure that the network can handle a high percentage of increase. We've made some improvements. We'll continue to make some improvements. We're on PythNet v1. We'd like to see stuff improve to the point where we can really start to scale things up and you can get all global markets on a single, in a single network everywhere, accessible, really just giving everyone access to the same markets so that, this whole global financial markets can exist. And then, ultimately you just need to always be making things faster. So as I mentioned, we've run PythNet on Solana mainnet, which at the time was the fastest layer 1 blockchain out there. Is 400 millisecond price updates, or 400 millisecond block times, which equates to the price updates. Fast for blockchains, slow for traditional markets. So that needs to get faster too. So we've been doing some experimentation with how to bring that down, and we really want to see that improve. So there's a couple other products that the network has, but I don't want to distract from the core mission, which is to bring the price of everything available everywhere secured. And so that's what I'm most focused on, and that's what we really think is going to be the biggest unlock for all of DeFi.
Wow. Thanks, Mike. And what you say is like, I feel so much enthusiasm and so much passion for growth and improvements. And that's really valuable for any founder, C-level of any project. And what's more important, I feel so much confidence in your words. So I'm 100% sure that you'll achieve all the goals you have settled so far. And yeah, best of luck with this. We'll be staying in tune and tracking what you guys are doing. Yeah, and for now, we're getting closer to the end of our today's discussion. Just a personal question addressed to you as an expert. I bet you know so much more than I do about this. So what DeFi trends are you following most closely?
Well, I think that there's two worlds. There was the world prior to last Tuesday, and there's the world today. And the world prior to last Tuesday was one where there's a whole lot of fear that there would be a regulator who could pull up arbitrary charges on any protocol without any kind of rules to go against. And today it feels like we've been refreshed, and there's the opportunity to build and actually build stuff that you feel proud of without having to describe things in very awkward and complex ways. So I think that it's a very refreshing time to be a builder in DeFi, because I think we're going to start to get the lion's share of the attitude and the temperament from the US to be more encouraging. And the US has a great history of being an innovative leader, innovation leader, and there's no reason why it shouldn't be a leader in the crypto markets. I think with this administration, we'll start to really get some rules of the road, how they want things to be transacted, and they will be guiding forces for us to actually build this global financial market. So when I talk about the markets for crypto and what's being used from Pyth, it's all crypto, right? So of the 550 symbols that are published on blockchains, 75% of them are crypto. That's all that's being used. And that's the reason for that is because most of the builders are very scared that the SEC has acted in bad faith in the past and has come up with capricious lawsuits going after them. I think now, if we get some new rules in place, we're going to start to see people who are a little bit more encouraging on experimentation, and we're actually going to see an acceleration of the markets being made. What's my dream? So my dream is that we've got 550 symbols. I want to come out with several thousand more, and I want application builders who are pushing us to get even more. It's a dream to see this, we're the price layer, there's the execution layer, and there's the settlement layer. I want to see the execution layer really start to push things dramatically. There's some use cases where they're not necessarily on chain, but OpenBB, which is kind of a AI-powered competitor to Bloomberg, is using a lot of data, and they keep consuming more and keep asking us for a lot more data. That's encouraging, but I really want to start seeing application builders that are pushing for more rates products, FX commodities, equities globally, That's how we're going to ultimately transform the financial industry.
Well, thank you. You kind of unexpectedly changed this more or less traditional question into some encouraging short speech, and wish your dreams come true, actually, sooner or later, better sooner. And yeah, I do believe that you have all the facilities to bring it closer. And we're getting to the end of our interview, and this is our last traditional question. So could you please share some piece of advice to our viewers? So it could be something addressed to an exact part of the audience, to the founders, developers, newbies, or whatever, or some universal advice. Just share whatever you think valuable. Please go ahead.
Yeah, I would give the advice that I would probably give to someone that wants to do something different. Could be a founder, could be someone that's carving out a business within a larger company, is to, kind of transport yourself, 6 months to 12 months in advance and look back, because the benefit of hindsight is the way that you can make the best decisions. It's assuming that you've gotten here and picture wherever you want here to be. Like, what are the things you would have needed to do? This advice, was given to me a long time ago, and it was done at such a meta level where it was like, picture yourself at your own funeral. What do you wish you've done? But you can apply those same principles into everything. If you think about the fact that time is limited and that you are a very strong person that's capable of a lot of things, especially if you're motivated to do so and you believe that you can, then, kind of doing it in this strategy gives you the ability to, give yourself some superpowers.
Well, very encouraging ending we have here, and nothing to add, actually. So guys, please put the notes and try to keep it in your mind. For today, that's it. I feel there are still so many things we can discuss, and I do hope to see you, Mike, in more episodes. And today, thank you very much for coming, for joining in. I do believe that everyone enjoyed this episode. So
thanks, Max.
Yeah, and thanks for everyone for watching us till the end. Thumbs up to see Mike in more episodes. Stay tuned. Take care. Bye bye, guys.